so be on the lookout. All right, breaking news. Insurance companies are officially getting in on TARP. Hartford Financial saying it's approved to get a $3.4 billion government loan. Other companies included in the program, Allstate, Prudential, Lincoln National, Principal Financial, and Ameriprise, all totaled looks like $22 billion for 6 insurance companies. Jim Courtovich is the managing director of the government affairs and communications firm Kearsarge Global Advisors. Jim, good to see you. Thanks for being here.
Good morning.
Any surprise that they extended the program to the insurers, and what happens next?
Well, this has been going on for about 6 months, and I don't think it's a big surprise. I think the bigger issue is on TARP itself. We did a poll last week, and only 31% of the people polled supported TARP, unless they found out that there was a return on investment, and then 64% supported it. So what we're trying to measure is people's support of this, and what we're really seeing is people want to see the money paid back as soon as possible. They want to see some kind of oversight with those monies that are going out. And so I think what we would like to see is some of the banks to start paying back their money when they get to that ability that they can, and there'll be more money within the program that they can extend out to the insurance industry in areas where they have to be able to do some stopgap measures.
Yeah, listen, Jim, I've talked to Neil Borowski and Elizabeth Warren, 2 people who are trying to get to the root of where the money is going and what kind of return on equity we'll get, or return on investment, ROI. But it's hard for the American public to wake up week after week and find out about a new bailout for big business as opposed to many of those people who are small business owners. How does the administration wrestle with the fact that at some point the perception is this was created for financial institutions, now it's autos, now it's insurance, people are going to say, what's next?
Sure. Well, they have to link it to Main Street, and that's the big issue here. I mean, if you look at this industry, they have over $1 trillion in debt and bond that they buy, and they're very important to our overall credit markets. And I think what the administration has to do is to successfully point out how this affects small business, how this affects people who are putting in a claim for auto accident or retirees getting their payment, and that this is a short-term proposal. And I think that's the probably complication people see with the government not kind of jumping to get TARP monies repaid by banks, is that over 80% of the people we polled want to see healthy financial institutions repay their money immediately. And so I think they have to put a focus on this as being short-term. There's a return on the investment that's made by the taxpayer. There's been some talk on some of the banks repaying that on community banks shouldn't have to repay the warrants and the interest and all that. I think that's a disastrous mistake. If the government is going to try to give some kind of credibility to this program, they have to show that these businesses aren't getting a bailout. They're getting a short-term infusion of dollars that are able to get us through this crisis.
Yeah, I mean, let's pitch it as a loan as opposed to an injection without a return. Jim, excellent points across the board. Thanks so much for joining us this morning. Appreciate it.
Thanks so much.
All right, guys, coming up, we're going to get a look